All right, let's just jump right into it because we're looking at a situation that honestly, it just doesn't add up. You've got this escalating conflict between the US and Iran. The Strait of Hormuz, one of the most critical oil choke points on the planet, is basically closed for business. Now, by any normal logic, the stock market should be freaking out, right? But it's not. It's actually doing the exact opposite. So the big puzzle we're going to try and solve here is why?
And this slide, wow, it just lays out the disconnect perfectly. It's a tale of two completely different realities. In one column, you have these geopolitical headlines that are the stuff of nightmares for strategists. But then you look at the other column, the market is absolutely euphoric. The Nasdaq just had its best 10-day run in years. The S&P 500 is right on the verge of an all-time high. The headlines are screaming crisis, but the market is yelling, everything's awesome. So what in the world is Wall Street seeing that maybe the rest of us aren't?
So to solve this mystery, we've got to follow the money. And the first clue, it lies in a handful of genuinely positive economic signs that investors are really holding on to. Let's start by unpacking this optimistic case, the bull case, that's fueling this pretty incredible rally.
It really starts with this number right here, nearly $28 billion. Just let that sink in for a second. That's the combined first quarter profit for just 3 of America's biggest banks, JP Morgan, Wells Fargo, and Citigroup. And get this, that's a 17% jump from last year. This isn't just a little better than expected. It's a blockbuster signal that the core financial engine of the economy is running surprisingly well.
And hey, it's not just some abstract number on a spreadsheet. The leaders of these banks, they're all telling the same story. They're seeing resilience. Despite everything going on in the world, despite inflation, their reports show that American consumers and businesses just kept on spending, kept borrowing, and kept investing. The big takeaway here is that the foundation of the economy, the consumer, appears to be holding strong.
And that wasn't the only piece of good news. There was also a positive surprise on the inflation front. The wholesale inflation numbers for March came in cooler than a lot of economists were afraid they would. And this was seen as real evidence that maybe, just maybe, the shock from those soaring oil prices might not be as bad as everyone first thought. It really gave investors a glimmer of hope that this crisis could be contained.
But look, strong earnings and one decent inflation report, that doesn't fully explain this level of market euphoria. To find the real engine driving this whole thing, we have to dig a little deeper. We've got to look at the one big story that investors seem to believe is more powerful, more transformative, and ultimately more important than any single conflict. And that story, you probably guessed it, is artificial intelligence. For a huge, influential group of investors, the AI revolution isn't just another tech trend. No, it's seen as a fundamental, once-in-a-generation economic shift. One so powerful that it makes all the old risks and conventional worries seem, well, almost irrelevant. It's not that they don't see the conflict in Iran, it's that they believe the AI boom is just a much, much bigger deal.
And look, this isn't just some vague promise or hype. We are talking about a tidal wave of real money. The biggest tech companies out there are estimated to spend an insane $750 billion on AI infrastructure this year alone. And that's projected to jump to nearly $872 billion next year. This is a massive concrete investment cycle that's creating very real winners, all the way from chip makers to software companies.
You know, this AI boom is so all-consuming that it's actually changing our culture. It's seeping into the very language that corporate America uses to talk about itself. It's a subtle sign for sure, but it shows just how deep this revolution is running.
Check this out. According to one communication strategist, this specific sentence structure, it's not X, it's Y, is a classic fingerprint of AI-assisted writing. Think about it. Coca-Cola saying, basketball is not just a game, it's a global cultural engine. Sounds familiar, right? Well, research found that the use of this exact phrasing has literally doubled in corporate documents in just the last couple of years. The language of AI is actually becoming the language of business.
Okay, so we have a pretty powerful narrative, right? Resilient consumers, amazing earnings, and a world-changing AI revolution. It's a really compelling story. But what if it's not the whole story? This is where the plot thickens. Now we're going to uncover the very real risks that are hiding just beneath the market's shiny, optimistic surface.
The counterargument, the bear case, it rests on 3 huge risks. First, that strong consumer we talked about, it's not so simple. Even the bank executives are describing a bifurcated economy, where wealthy people are doing great, but lower-income families are facing some serious pressure. Second, this idea of a quick, easy peace deal in Iran might be wishful thinking. Reports suggest hardliners are taking over, which makes a lasting solution a lot less likely.
And third, and folks, this is the big one, the market has been propped up by a massive cushion of cash that is just about to vanish.
So what is this cash cushion? Analysts are calling it a liquidity boom. Basically, it's an estimated $700 billion that got injected into the system this year, and the main source of this cash has been early tax refunds, which pretty much act like a direct stimulus payment for millions of people. This has been a huge but very temporary tailwind for the market.
And here's how it works. It's a really simple two-step process. Early in the year, everyone who's expecting a refund files their taxes as fast as they can. That injects hundreds of billions of dollars into the economy. But the people who owe taxes, they tend to wait until the very last second, that April 15th deadline. So, just as the cash injection stops, a massive cash drain begins.
And the scale of that drain is, well, it's staggering. Analysts are estimating that over $500 billion, with a T, is about to be pulled out of the banking system in just the next 3 weeks as people pay their tax bills. The liquidity, the cash that has been fueling this rally, isn't just slowing down. It's about to be thrown into reverse.
So where does all this leave us? It leaves us with a market at a critical crossroads. It's caught in this massive tug-of-war between two incredibly powerful and completely opposite forces. It's a battle between his beautiful vision of the future and a very, very messy present.
And this is the fight, right here. On one side, you have the incredible promise of tomorrow, the AI revolution, those record profits, game-changing innovation. But on the other side, you have the cold, hard risks of right now, an unresolved war, that $500 billion liquidity drain, and a consumer base that might be cracking under the surface.
Which brings us to the final, crucial question. For months, the promise of this AI-powered future has been powerful enough for investors to look past a world in crisis. But now, as the financial safety net for this rally gets pulled away, we're all about to find out if that promise is strong enough to stand on its own. The market is betting yes, but the immediate risks have never been greater.